first 15 minutes of trading, the Nikkei nosedived 4%. Same tune as Wall Street, different side of the globe. Japan's stock market, along with all of Asia Pacific, followed the U.S.'s slide into negative territory. The market drop is especially unsettling to Japan, who just intervened in its currency in an effort to prop up the sinking U.S. dollar and stop the surging yen. Successful for a day, a brief respite for Japan's slumping economy. But the dollar dipped again on Friday and the yen rose as Wall Street fell. If there is good news as the closing bell rung in Tokyo, it's that the 3.7% drop could have been worse. Investors are merely trying to adjust their risk position. Kyung-hwa, CNN, Tokyo.
The markets in Asia plummeted after Wall Street's worst sell-off in 2 years. Tokyo closed down by 3.7%, Hong Kong ended lower by 4%, Shanghai followed suit by 2%, and the Australian markets also ended in the red by 4%. Investors are increasingly concerned about global growth. Recent data out of the U.S. show that the economy there is weak, manufacturing is slowing, consumers are cutting back on spending, and a lot of economists have recently downgraded their forecast for U.S. growth for the rest of the year. On top of that, Europe is in the midst of a sovereign debt crisis, and here in China, the authorities are tightening their policy to fight inflation, hence reining in growth. Investors are concerned about this picture, and many of them are growing increasingly worried that governments are running out of options to keep the global economy going. Many now fear a double-dip recession. Uniseum, CNN, Beijing.
European markets continued their rout on Thursday in the midst of holiday thin volumes and nothing positive to calm jittery investors about the global economy. Shares across the European board suffered. In London, banks, luxury goods, and mining shares all suffered. The FT 100 closed nearly 3.5% lower. The same for the German DAX 30, where no share ended the day higher for the second straight day. And some Swiss exporters who have been complaining about the strong currency there were down more than 5%, as were the Swiss banks, with the SMI index there ending more than 3.5% lower. The worst index of the Big Four was the CAC 40 in Paris. It closed down nearly 4%. Now, banks are suffering because of global recession fears and because they are saddled with European government debt. And at its monthly meeting, the European Central Bank did nothing to announce anything dramatic to calm the bond markets. U.S. market drops triggered an especially sharp sell-off in the last 30 minutes of the European trading day. Now, with 1 day left in the trading week, European shares have suffered one of the worst weeks since the economic crisis, with some shares now at 2-year lows. Jim Bolton, CNN, London.
If you thought the market slide in the U.S. and Europe was bad, take a look at this. Losses across the board, with Argentina's Merval losing more than 6%. Not far behind, Brazil's Bovespa dropped 5 3/4. As a matter of fact, Brazil was the worst performer among the world's 20 biggest equity markets. Brazilian stocks have tumbled 27% this year, the fastest pace since 2005.